All right, so podcast listeners, so excited to talk to Michelle Musacchio in our next episode. If you hate accounting and you love cats, check us out at our next episode.
Sure. So I absolutely adore cats. I have 3 of them myself. But what we're going to be talking about on the podcast is how to get you to your wildest dreams practice. We're going to talk about forecasting, cash flow, budgeting. Join us here because it's going to be a wild ride.
Good day, everybody. My name is Dr. Bonnie Bragdon. I'm your host today of the Veterinary Insider. The Veterinary Insider is the podcast for anyone, including veterinarians, who want to keep veterinary medicine independent, authentic, and real, and veterinary owned. Today's podcast is powered by the Independent Veterinary Practitioners Association. Check our benefits out at iveterinarians.org. And more importantly, today's episode is brought to you by Fit Money CPA. And I have our esteemed guest, Michelle Musacchio, here, and she is going to tell me why I am wrong in my hatred for taxation and accounting. But before we get into that, Michelle, I really want to hear about you, like me, are a cat lover. So tell me why cats are better than dogs.
Oh, cats are so much better than dogs. They're so cuddly and cute, and I don't know, they're just adorable. I have 3 of them, two torties and an orange tabby.
Nice. Oh, so you are a tortie owner, so you are all in. Are your torties true torties?
Oh, I got the tortie too going on in my house.
All right, Michelle. Well, all kidding aside, really and truly, I am not joking when I say one of the hardest classes I ever took was accounting. I have a DVM. I am a veterinarian. I have worked on a master's in clinical science, and I worked on my master's in business administration. And I am not kidding when I say that learning accounting and learning finance were just really hard because they were very conceptual, very theoretical, and you just really couldn't touch it, measure it, see it. So what inspired you to become an accountant and a tax expert? What drove you to that?
Oh, that is a great question. It was really kind of default. It's like, what am I going to do? So went into accounting, basically slept through all my classes and got A's. So, it was easy for me. As you said, it's all up here. So it's, just how your brain works. And I knew that I did not want to do the auditing side of things. So I was fortunate enough to get a scholarship out the University of Denver for my master's of taxation. And I just fell in love with taxes, and it's like putting a puzzle together. If you have some pieces over here and some pieces over here, you're eventually going to get everything to come together where we can reduce your tax liabilities.
So you find taxes a challenge. It's a fun mental exercise.
It most definitely is. And to your point, it's hard. Accounting and tax are just hard. There's so many changes from the tax side. There's so many changes on a daily basis, and you've got to keep up with it because you got to take care of your clients.
Well, I'm going to get political for a moment because, of course, everybody wants to know this, but I'm gonna approach the political question a little differently. What I want to know is what each candidate will get right about taxes if they're elected, right? So I want to hear what's going to go well for us. We need to hear about how wonderful the future is. So if Kamala Harris becomes our next president, what will she get right about her economic policy and changes to taxation?
I really like how she is focusing on the middle class. The middle class is our largest sector in our population. And if we can't support our middle class, then we're going to fail. We're going to fall. And that's one of the things she's really pushing for. When you're talking about putting a ban on the groceries and things like that, that's not going to happen. And one important thing to remember both on Kamala and on Trump is that they don't really get the final decision. It's Congress that really makes that decision. They're the ones that put the bills together, and the House has to vote, Senate has to vote, and it's up to the president whether to veto or accept it. So,
Good reminder. Again, that's why we call it the Veterinary Insider. So we have the inside scoop. All right, now Donald Trump, love him, hate him, want to assassinate him, want to hug him, kiss him, whatever we feel about our former President Donald Trump. What do you think he might bring that will work well for our country in terms of the economy and taxation? What changes will he advocate that you like?
that's a great question, and I am stumped on that. As are quite a few economists, and doing my research, you Google the plans, and it's so confusing as to what's coming out of his mouth. You can't really come up with a plan that he's presenting to us. He wants to really have tax savings for the wealthy. He wants to bring businesses back to the U.S., which is a good thing, but he also wants to have tariffs on our other countries, which means our prices are going to go up even more than they are. So, to pull out one good thing,
So what I'm hearing you say is we have to remember that we are a global economy. We don't manufacture as much as we used to. While we love small businesses, our small businesses tend to be service related, right? Restaurants, hair salons, veterinary practices. So we depend on those outside countries for all those supplies. Inflation is important for everybody. Costs are going up. Why should veterinary hospitals be worried about inflation? How is that going to affect the consumer? What do we need to think about when we think about inflation for our customers, and why we need to be worried about that?
so that's a fantastic question. And, we've heard the struggles with inflation for the past couple of years, but in reality, inflation is at its lowest level since, I believe it's 21. So we're doing well. But what happens is prices increase, as we all know. Our utilities, our groceries, fuel for our cars, just across the board, the prices are going up. And because of that, as service businesses, as you said, we're all majority service business in the US, we have to be cognizant of that because our vendors are raising their prices. We have employees that we want to treat fairly and give them a living wage, if not better than that. All kinds of benefits that we may want to give our employees. So, from a veterinarian practice perspective, when you're looking at how you're going to price your services, you have to take all of that into consideration. And then we have the other side of it, the consumer side, who are going to come in and say, you charge too much. And, again, they don't understand, or if they were to think about it, they don't think fully through it that, oh, my prices are increasing, so theirs are too. And, it's a battle. You've got to get that balance between the two. And I know sometimes veterinarians feel literally like they're in the middle and they're being pulled in multiple directions. And I know that this is a huge, huge stressor. And what I want to say is stay strong because value your services. What you do is important. And I, as a consumer of your products and services, want you in business.
So I hear you loud and clear, right? So we know inflation is maybe, what I love what you said about inflation was we're hearing a lot of noise from the media, which just isn't true, right? So we're basing all of this fear on emotion and not numbers. So how that links back to you. So help me understand what accounting does for practices and how that takes the fear and the emotion out of managing our practice, right? So how does accounting help bring facts back to decision making?
Sure. So you're really talking about storytelling is what you're doing. And, to go all the way back to the basics of what accounting can do is we're, of course, recording the transactions, the debits and the credits, and making sure everything's in the right buckets and all of that. But when I'm working with my high school students at my alma mater, I tell them, I don't care what career you're going into, take accounting 101 and 102. And the reason being is when somebody hands you a financial profit and loss statement, a balance sheet, and or cash flow statement, you want to be able to understand those. And you want to be able to look through those foreign numbers, because I know a lot of people's brains don't work in numbers, but you want to at least be able to make sense out of them. What's that story? How do we look compared to last year? How are we doing compared to our budget that we have projected? Where's our cash flow? Do we need to consider bringing in another line of revenue? Do we need to cut some expenses that we don't necessarily use anymore? So again, it's going back to the storytelling and what you want to learn from your practice.
All right, so Michelle, we promised we would talk about the basics of accounting, and so let's walk through just at a really high level what is a profit and loss statement and why should I care?
So profit and loss statement, by its name, as you can kind of figure out, you're taking all of the revenue that you're bringing in, and then you're subtracting out all of your expenses. And in between there, you're going to have a little category called cost of goods sold, which is generally in the veterinarian world, it's your medicines, it's the vaccines, it's whatever you spend in order to take care of your practice. The other expenses, whether they're fixed or variable, those are outside of that cost of goods sold, and those pertain more to the administrative part of the business. And generally you have a lot more control over those than some of the things in that cost of goods sold.
Michelle, you explained that so well. I wish you were my professor in accounting. I think I would have gotten this much faster, right? So we talk about that gross revenue. How much money are we pulling in? We always take out the cost of goods sold first, and then we take out the rest. So there's some subtraction and some odd numbers in there, but it's really not as overwhelming as we think. That leaves us with, if I'm not mistaken, that would be like our gross profit and then or net profit, and then we subtract taxes.
I know they get all confusing in there. So what you're looking at is you have your gross revenue, then you take out your cost of goods sold, and you come up with your gross margin. And then after you take out all those other expenses, you get your net profit. We want a profit, we don't want a loss, but sometimes you do see that negative number in there, which just means, hey, look at this, look at me, pay attention, we need to make some changes here.
Perfect. All right, and so after the profit and loss, which really helps you understand what's going on and where you need to attend to things in your practice, then we have the balance sheet. So the balance sheet, how does it always end up being the same? I don't get that.
Well, by its name, it's a balance sheet. It's supposed to balance. And what the equation is it's your assets. So your cash, your equipment, your furniture, any receivables that you might have outstanding. Those are your assets. Then if you take your liabilities, credit cards, loans, any note payables, maybe you bought a car, so you've got a loan on the car, and add your equity, which is what you've put into the business. I like to explain equity as a checkbook. And I know some millennials don't know what a checkbook is, but you put your money into your account, and then you're subtracting out your losses, your distributions, you're adding in your profit or any contributions you might make. So that number, that equity number, is what you have done, what you have produced since the inception of your business. So you add the liabilities and the equity together, and you get it ties back to that asset number.
Right. So that's a good place to look to see about the long-term health of the business, what kind of debt the practice is carrying. And debt is kind of a sign of how we're cash flowing. And so, oh my God, I never get the cash flow statement. That one, profit and loss, got it. Balance sheet, yeah, sort of. Cash flows, oh, poof. What is it? How does cash flows, how does that statement work?
So it's very odd and it is very confusing. A lot of accountants can't even do it. So don't feel bad. Don't feel bad. But what the cash statement is telling you is your ins and outs, where you're spending your money. So you're going to look at operations and, what are your outflows from operations? You're going to look at your investments. What have you purchased? What fixed assets maybe that you've purchased to increase that? Literally investments. If you have some extra cash, you're going to want that to grow. So you're going to have that in your cash flow statement. And then you're also going to show where you're paying out money for that liability section of the balance sheet. And believe it or not, all three of those statements intertwine with each other. And you're going to see some of the same numbers on each of those statements.
Michelle, my accountant hands me a PDF like once a month and I kind of look at it. So what should I be doing with these statements? How often should I be looking at them? How do you counsel your clients?
So my first question to you is going to be, when you receive that, when you receive that PDF, are you getting a comparison to prior year? Or are you just, you don't know? Okay.
I don't know.
What I like to do is when I'm talking to my clients, and we'll do it through Zoom, they'll come into the office, whatever's easiest for them. We have clients actually all over the world, so these Zoom meetings are not an issue. But what I like to do is print the profit and loss statement compared to prior year. Because, again, if you're looking at numbers themselves in one line don't mean anything. But if you're comparing it to something, you can say, oh, hey, wait a minute. Why is this expense so much higher this year than it was last? And if you can come up with, you know what, we actually have more clients, so we had to buy more vaccines, so it makes sense to me that this number is larger this year than it was last. So again, it's trying to make sense out of the numbers, but you need some perspective from it.
So accounting, I always understood it to be a look backwards, right? I'm looking out the rearview mirror if I'm driving. And so you have a program called Foresight, correct? So help me understand how Foresights work and what that looks like.
We actually have three programs. We have Hindsight, Foresight, Hindsight, Insight, and Foresight.
I said that wrong, didn't I? Yes, go ahead.
No,
I'm
no.
so sorry.
No.
Yes.
So to your point, the hindsight, the only thing that we're doing is looking backwards. We're going to get your books in order. They're going to be all nice and pretty, and you're going to get these, nice, pretty reports. But that's it. You're looking at history. And yes, we have to look at history so we don't make the same mistakes going forward, but that's all you're getting. Our Insight package, you can look at it as like a controller of a company. Whereas we're going to do a little more analysis with you. We're going to do some forward looking on your numbers. Of course, we're going to do your tax returns in any of these packages. Once you understand the numbers and once you have everything in order, the tax returns are basically, again, reporting history. So they almost become a moot point because we've got all of our numbers and everything in our package that we need. On the Foresight, that's the one that's going to be digging a little bit deeper. This is a package that we like to present to practices that maybe have been in business for 5 years or more. Because they're at that point, it's like, okay, we're making money, we're good, but we want to move forward. We want to increase. We want to bring on another doc. So this package helps you look at KPIs, key performance indexes. What the heck does that mean? So what it is we're going to take the veterinarian industry as a whole, and we're going to compare where your practice lands versus everybody else. And it's going to be practices similar to yours. So we're not going to compare a single doc practice to a 10 doc practice. So those would be the KPIs that we want to make sure that we're looking at and taking care of. We want to do things like cost controls. So we're going to look at your inventory, see how we can maybe maintain a smaller amount in practice and let the vendors hold on to all of that as opposed to us holding on to it in our shelvings in the back room. So it's budgeting, it's forecasting, it's that cash flow analysis. So it's really getting into the granular part of your practice where you as the owner, you don't need to be in the weeds right now. You don't need to be thinking about putting your books together. That's where we come in.
So I'm going to take a step back. Let's assume maybe I haven't been so diligent about my accounting. Maybe I don't even have an accountant. So help me understand first part of this question is help me understand what happens with poor accounting. Any stories you have? What goes sideways? Yeah, what goes sideways when you're not paying attention to accounting?
As you can imagine, when you're not doing accounting, when you're not doing your own, keeping track of all of that, you don't know where you are in your practice. You don't know if you're making money, losing money. You can't keep track of what you need to buy, don't buy, anything at all like that. What a lot of times happens is, and I know the majority of states have changed to where they're charging sales tax on services for veterinarians as well as the medicines. And if you're not on top of things, you don't pay your sales tax. You don't pay your sales tax, the government gets mad. When the government gets mad, they come and put a chain and lock on your front door. So it's extremely important to kind of pay attention to what you have right in front of you.
So if I'm in that state where I really haven't been paying attention to my bookkeeping and my accounting and I really have some anxiety and fear, what does that first step look like for a client like that working with you, right? So now we're talking kind of about the Hindsight's package. So what does that process look like, Michelle? How does that client work with you?
So the first thing I tell people is don't stress. We're going to take care of you. And what we do is, obviously we need to see exactly where they stand. We want to make sure they're in compliance with, again, their sales tax, their payroll tax, their income tax. That's the primary thing. Have you received any notices from any government agency? If you have, we're going to help you through it. Don't worry. We'll take care of it. Then we want to move into, okay, how are you keeping track of your books right now? Oh, using an Excel spreadsheet. Okay, that's good. We're going to put you on QuickBooks Online. You're going to give me access to your bank accounts and your credit cards, and we're going to get all of your numbers in order. And once we do that, and it shouldn't take, I don't want to jinx this, but it shouldn't take too terribly long to get you back in order. But again, it is a process, and it's not going to happen overnight. So if you've got to get a loan tomorrow, don't expect to come to a CPA and get your paperwork. Give us some time. But again, we try to make it as easy as possible on clients because you guys have enough stress in your lives. We want to take the stress away from you.
All right, so we heard nothing is fatal. I've learned that. Nothing is fatal in accounting. Nobody dies in accounting. You can make it up to the government. The government just wants your money. They don't want to put you out of business. So work with Michelle to get things straightened out. I heard you say we're going to move to QuickBooks, which is a great tool to get organized. You're going to take care of everything, put it all in order, and get it rolling. Help me understand, how does QuickBooks work with our practice management software, or are they separate? How do I get that all sorted out?
So the majority of practice management software that I've run into in the veterinarian practices integrate with QuickBooks. So they're talking to each other. And because of that, you can get even more information out of everything and more reports. And again, more portions of that story.
Wonderful. All right, so we've kind of tied that up in a nice, neat little bow. No reason to panic. Stay calm. Reach out to Michelle and Fit Money CPA. They got you covered. But let's say we've moved on. So we've moved on. We've got good reporting, but let's say we just kind of don't understand it. So we've got these comparisons. We're ready for the next level, which is the Insights package. So we're ready for the next level. We really want to start to use our data, not just for taxes, but for day-to-day decisions. So what does that next step look like?
So first thing we're going to do is set up a monthly meeting with you, because if we don't meet, we can't talk. So that's going to be again, the first thing we're going to do. We're going to look at historical dashboards, because right now that's where we are. We want to look at, again, those comparisons, see what we've done in the past, see how we can improve. We're going to start doing the trending forecasting. So what that is on a monthly basis, we just keep rolling that forecast forward so that we know we need to have this many clients to get this much revenue. And if we have this many clients, historically, maybe 80% of them are going to be well care, 20% might be sick. So, again, you can calculate some numbers based off of that. We're going to do some quarterly tax planning, which means, for one thing, you're going to have to pay your estimated taxes. And again, that's going to be based on your net profit. We're also going to do an entity selection comparison. Should you be a sole proprietor, an S corp, a partnership, a corporation? We're going to look at all of that, see what's best for you. We do have some technology that we recommend, so we're going to go through that process too. Again, making sure you have what you need to be successful.
All right, so we said hindsight's looking through the rearview mirror. Insights, we're starting to look out into what's immediately in front of us. We're starting to get used to the idea of trending, anticipating, being prepared, paying our taxes in advance, so no big surprises at the end of the year. So really kind of probably, like you said, that mid, we're starting to make money, we're starting to really drive our destiny. So now we got that under control. All right, so help me understand, where's the foresights, right? Do you have a crystal ball? Michelle, tell the truth. You got a crystal ball? Come on.
I do.
Tell me the truth. So now we want to talk about the real advanced future. So help me understand how foresight is going to be different than just insight.
So one of the things that's hugely important is that we take care of us. As practice owners, you've put in the years of school, the education, the tests. You've built this practice, and you need to take care of yourself. So we're going to help you figure out how to set some money aside so that you're basically paying yourself first. That, yeah, we've got employees we have to take care of, but again, as practice owners, if we're not taken care of, we don't feel safe, we don't feel secure, we can't take care of anybody else. So that's one thing we're going to do. We're going to do some financial goal setting. And what the heck does that mean? It's like, where do you want your practice in 10 years, 15 years, 20 years? It's, again, looking forward. It's what's your goals? Where do you want to be? We're going to look at your personal goals too, because you're one person. They're going to intertwine. So we've got that. We're going to look at, again, some of that strategic accounting where we're looking at industry real-time comparisons, those KPIs, so that you know where you stand. And if we're hoping you're up here and everybody else needs to come up and be just like you. And if that's the case, then we can talk about another revenue source, but that's another issue. We want to look at your internal controls. You have your front office person, are they Are they taking care of that money? Are they taking care of that cash? Are you having maybe your bank statement sent to your house? Somebody else is reconciling besides the person that is doing the accounting, unless it's us, of course. I mean, we're not taking anything. But, again, those types of things that you need to think about. Yes, we love our employees, we trust our employees, but it's trust and verify. So figure out those things. We do, again, some proactive tax strategies. We do more than just those quarterlies. We look at how are we going to be able to save. You brought up politics earlier. We don't know what's going to happen next year. And what that means is that it's going to go back to what it was prior to 2018. Again, we've got to take all that into consideration when we're doing that tax plan. So that's, it's getting into the nitty gritty when we're doing that foresight.
Well, I love what you have to say because, again, just to review, accounting's not as difficult as we think. It does take some special skill sets and some special insights of, looking in and understanding. We start off by making sure we've got, similar to a patient record, we're recording the past in a responsible, legal, ethical way, starting off with good data. Once we understand how to chart our patient and our clinic, chart of accounts, a little bit of a pun there. So we start off with hindsights, we then move on to this idea of insights, and that we start to understand the pattern of what's happening over time, making sure that we're anticipating what's going to happen. And then we get down to brass tacks with foresights, where now we start to control our destiny. Now we're driving the revenue rather than revenue driving us. Nice. I've got a good handle on this. So, I always tell people, so if we talk about the life cycle of a practice, okay, so we talked about different packages and different levels of accounting. Let's back this up and talk about the life cycle of a practice. So walk me through, from birth of a practice and birth of a baby veterinary owner to exit strategy. How does somebody manage the life cycle of ownership?
And they're so cute when they're little babies, aren't they?
Little cute baby vet.
So, obviously, you have your experience. However you received your experience, surgery, GP, whatever you happen to be in derm, then you're like, oh my gosh, why am I working so hard so this person can make money and I'm stuck at this level? It's like, I wonder if I could do a better job. So you start those conversations. You need to bring in a great lawyer and a great CPA. And between the two of them, they will bring in an insurance person. So those are the three parts of the stool, the three legs of the stool. So the lawyer is going to get you set up as an entity, as a business with your Secretary of State. Then the attorney and I are going to talk to you about, okay, what do you want your practice to look like? Are you building a building? Are you going to rent a space? If you rent a space, are you going to have to retrofit that space? So, again, we're talking through all of this. And once a decision's been made, then we got to get some bankers in, because you got to have some money in order to either buy or build out that practice. So we're excited. We're still working. We're still doing. We've got our full-time job, and we've got another full-time job because we're building our practice. And we finally get the doors open. And it's like, okay, people are going to come to me, aren't they? I have my sign out. They know I'm here. So you've got to figure out what kind of marketing you're going to do. And in this day and age, the majority of marketing is digital. So you got to work with a marketing company to figure out how you're going to get your practice, your clients in. And in the meantime, on the backside, we've set up your QuickBooks, integrated it with your practice management software. So we're ready to go there. And all we're doing is waiting for those clients to start pouring in, which they do. They do. And you build the rapport with the clients, then word of mouth gets out, and, you're building, and you're 5 years in. Shoot, now what do I do? I haven't had a vacation in 5 years. I want to go out. I want to do this. I want to do that. Maybe I better go back and talk to my CPA, see what else we can do. So, again, it's getting expert help from all over. And as a CPA, I do the same thing. I have outside influences on me that help me grow my business. So, we've got our path going. We're good at 5 years and we're going to steady. But hey, I want to do this. I want to get another doc in here so I can take a vacation. So that's where we start the plan. And all along, since the day of inception, we're also looking at your exit strategy. When do you want to close the practice? How are you going to do it? Are you going to sell it to your staff? Are you going to sell it to another private doc down the road? So everything's just all in combination. And when you're working with professionals, we keep it in sections so that it doesn't get so confusing in your head.
All right, so you talked exit strategy, right? So I always like thinking about daydreaming in numbers, right? So we start off with, at 55, I want to retire. I want to go fishing with the grandkids. I want to go to Disney World. I want to do all this stuff. We start off with what we want, and then we build it backwards. So Michelle, what does that look like? We have this goal. What is the next step to this highfalutin goal? How do we put numbers and goals around that goal, that big conceptual thing?
And that's an excellent question. And again, going back to the crystal ball, we don't know. and as you have seen through the veterinary industry, 30 years ago, if you were selling your practice, you would not get what you're getting today in today's dollars for your practice. So all we can do is, whether you want to call it a dream or a plan, we've got to start someplace. We're going to say, okay, I'm going to retire at 55. This is what I think I need to retire, whatever that number is, whatever you want to be. And you're thinking that right now practices are going between 4 and 10 times gross. So, okay, if I make $100,000 in revenue and I sell it, I might be able to get $500,000 for it. That's not enough for me. So again, you're playing that number game, and then once you figure out what that number is, let's just say, I'm going to just use easy math because that's where my brain is right now. We want 500,000 is what we're going to get. That's what we want. That's all we need. So we're going to go backwards from there as to what does our gross revenue need to be coming up to that era, up to that age. And then, again, it's what do we want our practice to look like? How many lines of revenue, streams of revenue do we want? How many employees do we want? It's building that dream practice. And again, it all starts at the end and work backwards.
Yeah, so Michelle, I love what you're saying. So we start off with a dream of how, what good looks like. We build it backwards to big numbers, and then they can contact somebody like you to boil it down to brass tacks. How many dogs do I need to see a day? Well, really, how many cats do I need to see
That's
a day?
preferable, yes.
Yeah, let's talk cats. So how many cats do I need to see per day? How many vaccines do I need to do? When it feels like if I do one more rabies vaccine, my head's going to explode, I can say, no, that's one more rabies vaccine that gets me closer to my dream of fishing, going to Disney World, touring Europe, whatever that looks like. So it takes that day-to-day incremental, I've got to do X, Y, Z, and it really helps translate it into that bigger dream of where I'm going to be in the future.
Exactly. And I think one thing to keep in mind, and I know I forget this as well, because you get in that drudgery. Again, you get in that day-to-day and things are just, but you're doing this number one, you're doing it because you love what you do, veterinary medicine. But you want to be happy. You want to be joyful. So go into it with that attitude. And, somebody comes in, you smile, you say hello. And that's when you get that connections with the clients and even other docs. If they see how happy you are, what fun you're having, better employees. So again, keep the drudgery out. It's going to happen, but just keep reminding yourself, joyfulness.
So, Michelle, what would you say to veterinarians who say, look, I don't want to own, it's too much work, I can't do it. I'm a veterinarian, I can't do it. Veterinarians are not known for their business acumen. Why would I want to be an owner? So what would you tell those veterinarians? Because I would say, go for it. But what would you say?
I'd say, great job. You know what you want to do, and you're happy doing it. Owning a business is hard, and it's not for everybody. And we need people to be there to do the work. And a lot of people are just happy taking care of that patient, talking to that client.
So, Michelle, you bring up a good point, right? Which is business ownership is hard. Accounting is hard. We need experts in our life to get things done. But it was hard getting through vet school, right? It was hard getting through vet school. It's all worth it on the other side. What are some attributes or personality characteristics that you see in veterinarians who embrace the difficulty, who seem to find joy in the challenge and end up being successful? So how can a veterinarian know that maybe business ownership is for me? Like, what does that look like? What skills, what characteristics do veterinarians need?
And I hate to say it, but you're going to know if you know. It's that drive to kind of take control of things. It's that drive for perfection, that drive for I can do this in a different way better. It's don't tell me what to do. I've got this one client, absolutely love him to death, and he has that drive, but he's very laid back about it. And this is what we're going to do, this is how we're going to do it, and this is the direction we're going to go. So I'm not a very good employee. So I know when I was an employee, I was always gritting my teeth because it's like, you're just driving me nuts. So, again, if you're going to be an owner, you're going to know.
I like to say, if you start to have thoughts of, I can do it better, it's time to consider ownership. Yeah, and I love what you have to say. If you're not a great employee and maybe you're getting written up or maybe you're getting terminated or asked to leave or whatever that looks like, ownership might be really something to consider for you. But let's pause for a moment. We're kind of coming up on the end of our time together, but what would you say to an associate? So let's say I've got an associate who's tried and true. We're going to stay an associate. Why would an associate want to learn about accounting and finance? Isn't that what an owner does? Should associates be learning about accounting?
Excellent question. And you're correct that the majority of the time the owners are going to be responsible for that. But what about production-based pay? You want to know, I've sold this, I've sold that, but you want to look at those numbers. You want to have those hard numbers where what you have done. So that if the owner, not that anybody would do this, but if the owner would say, oh, you didn't meet your goal up here, you can say, hold on, wait a minute. Here's the numbers from your profit and loss statement. It says I did what I was supposed to do right here. So, again, it's the understanding of the finances, and it's not just business, but it's personal, because we have bills at home we have to pay. We've got to do the budgeting at home and make sure we don't overspend, and we save enough for retirement and we save enough for vacation. So it's not just the business relationship as to why you need to understand finances. It's the whole package.
Right. So we understand our patient's health. Hopefully we're taking care of our own physical health and our mental well-being. There was actually a study done by Merck, one of their first well-being studies, and the top driver in that first survey of veterinarian well-being, mental health, was financial security. And so many early career veterinarians are suffering mentally because their finances are not where they should be or need to be. So accounting and finance is important for all of us. It's the foundation of security, right? We all need to be able to feed ourselves, take time off, grow a family, and house ourselves. And so finance is already always at the foundation of that. So, all right, Michelle, as we're wrapping this up, I know you and I share the bias that we love cats. Cats rule, dogs drool. Don't hate me. No haters on this podcast. But help me understand why independent practices rule. What do independent practices do better than corporates and chain practices?
Everything. Uh, I am not a proponent of the corporate world. I think what happens is when the corporate vets come in, it honestly does, all that matters is the money. The patient care, yeah, you got to take care of the patient, but really that feeling that you have that, oh my gosh, this is my patient, and I want to make sure that he or she is getting the best care possible, goes out the window. So when you're in an independent practice, again, I've only used independent vets, so I'm prejudiced towards them, but you form that relationship with your veterinarian. They become your friend. They are your team member in taking care of your kitty, and you can just tell that the empathy and the emotion that they have with your pet. And I know you guys don't get emotionally involved because y'all learned all that stuff, but you still get the feeling of it. So
Right. So with a veterinarian-owned, veterinarian-led organization, I always hear that relationships come first. Relationships come first and the money follows. So if I take good care of my clients and I take good care of my patients, I will be able to take care of everybody else financially. And that's different, right? So larger corporations, right? So when a practice or a chain of practices is led by a financial executive or an executive who's really there to tend to return on shareholder investment, those veterinarians, feet on the ground, they're doing an excellent job. They're practicing excellent medicine, but the whole decisions being made across the organization have to account for driving shareholder value. So a little bit different focus in how the organization is led. So as we wrap up here, Michelle, I just want to encourage our listeners to check you out at Fit Money CPA. I absolutely love your website. I have a marketing crush on you and your website. You love cats. You have a great website, which is so user-friendly. The reason that's important to our listeners here today is I really encourage you, if you're in fear, if you're stressed about your accounting, or if you are looking for answers and not sure what direction to go into, really encourage you to reach out to Michelle and her team. They've got you set up. We'll get you integrated into their program really quickly. It's very easy to understand from their website what value they're going to deliver. So fear-free Fit Money CPA. That's what I'm going to start calling you, Michelle.
I love it. I love it, Bonnie. Just love it.
Thank you for joining us today, listeners. We're so excited to have you. Please check out iveterinarians.org. It is the only association dedicated exclusively to serving the needs of independent practice owners. Please check out our esteemed guest at Michelle Musacchio at Fit Money CPA, the accounting firm that is helping independent owners. Michelle, what's the best way for them to get in touch with you?
It said just fitmoneycpa.com. There's a spot on there to hop on my calendar and see what works best for you. If for some reason you don't find anything within my calendar, shoot me an email. We'll get you in. No problem.
All right. So, Michelle, thank you so much for your time today. Thank you for our listeners. We're so excited taking the fear out of accounting.